Thanks for joining us today in our RESP mini-series. Last week we covered off what is an RESP. Today we're going to talk about 6 reasons why you should set up an RESP for your child, grandchild, niece, nephew, kid's friend, whatever it is. Before we jump into it, if you haven't already downloaded our free Retirement Ready ebook, there's a link below. And we've launched our financial masterclass. So if you haven't joined our masterclass or want to find more about it, go to financialmasterclass.ca or click the link below to find out more. We have a 50% off promo code for our launch until December 15th, so one more week. So make sure you take advantage of that. We will have the full 50% off for one more week. Link below, you can find out more about the masterclass. There's over 100 videos, training videos, content, downloads, everything to kind of equip you with the financial literacy you need to make better decisions moving forward around budgeting, savings, retirement, estate planning, everything, real estate, mortgages, all that stuff. So we have a ton of content in there, and we will have it again 50% off for one more week. So make sure to take advantage of that. So let's jump into it. Last week we talked about an RESP, what it is. Today we're going to go through 6 benefits of setting up an RESP. So the first benefit is the Canadian Education Savings Grant. So we talked a bit about that last week, but the CESG is a 20% return right off the bat. So the government's going to match you 20% on contributions every year up to $2,500, which means that the government's going to give you $500 every year up to a lifetime maximum of $7,200 for putting money into an RESP. So if that's not the best benefit there is, I don't know what is. So $500 every single year if you make contributions up to $2,500. Remember, if you miss a year or you miss part of a year, you can make that up down the road. So it's not lost necessarily. You can take advantage of lost years down the road. So if you have a tough year, maybe 2020 is a tough year, you don't have the extra money to put into an RESP, don't get disgruntled. You can make it up next year when things get a bit better. Benefit number 2 is that you save on taxes. So unlike an RRSP where you get a tax break right when you put money in, an RESP, there's no tax break when you put money in, but the money grows, the investment grows, tax deferred, which means that there's no tax payable every year on interest, capital gains, and dividends. Okay, so the money is put into the RESP, it's invested, and it grows. And every year that it grows, it's tax deferred. So the tax that's due is deferred until when you take the money out of the RESP. Now, that's step 1. The second layer to that is when the money's pulled out and taxes are due on all the growth, it's actually taxed in the hand of the student. So of your child or grandchild or whoever it is that the RESP is for. The benefit to that is that most students either have zero income or very little income. So, let's say they take out $10,000 out of their RESP every year for 4 years. Of that $10,000, let's assume that $2,000 to $3,000 of the $10,000 is growth or grants. So what that means is that $2,000 or $3,000 is going to be added to the income of the student. But if they're in a low to 0% tax bracket, there's no tax or very little tax to be paid. Versus you, parent, grandparent, could be in a much higher tax bracket. So an RESP most of the time will be redeemed on a tax-free or very minimal tax basis. So it grows tax deferred. So you get the grant, it grows tax deferred, and you can take it out maybe in a 0% tax bracket. So that's phenomenal. So that's benefit number 2 of the RESP and why you should set one up. The third reason to set up an RESP is the cost of post-secondary education. The average cost of post-secondary is $27,000. Okay, so if you go to a private university, it's going to be much higher. If you go to a public, it might be a bit lower, but the average cost over 4 years is $27,000. That's only increasing. When I went to post-secondary education, I went to a private university in Langley here. I paid over $80,000 for 4 years of education, and that was 15, 20 years ago now. So the cost of education, if you go the private route, is going to be well over $100,000. And even going to, UBC, U of T, wherever you're going to go, you're probably looking at $40,000 to $60,000, maybe up to $80,000 for tuition. So if you need another reason to open up an RESP and start saving and getting that free grant money and tax deferred growth, it's just the pure cost of education. You want your kids, grandkids to go get a post-secondary education. It's hard to get a job nowadays without some sort of post-secondary education. So start saving for that today. Reap the benefits again of the grants and tax deferred and tax-free essentially redemption at the end. But start saving today. Compound growth, right? So start saving for the high cost of post-secondary education. So the fourth thing to consider and the reason why to open up an RESP is free money. And we kind of touched on this already with the grant, but you could save for your kids' education in a tax-free savings account. Tax-free would have to be under your name. So you could just use your own personal tax-free savings, put money in there, let the money grow tax deferred, tax-free when you pull it out. So it kind of works the same that way, but you lose the grant. Okay, so the grant alone is worth it. If you've maxed out your RESP for your child, good on you. That's when you maybe shuffle to a TFSA if you have contribution room. But maximize that RESP grant money and the contribution room, because that's free money. You can't get that anywhere else. The fifth reason to open up an RESP is longevity. So if your child, graduates from high school and doesn't jump into post-secondary trade, whatever it is, that's okay. An RESP can be open until year 36. So it's got a long time horizon on the plan. So if your child does not use it right away, don't fret. They still have some time to use it. And we find that a lot of times nowadays, kids will jump into the workforce, make a bit of money, and then transition over to a post-secondary or a trade. So the RESPs are very flexible. They allow for that. So don't get hamstringed by, well, what about if my kid doesn't go to post-secondary education? Most do. Again, we've talked about family RESP and the benefits of doing that. So kids, if you have more than one kid, they can share in that pool. But even if you have one kid, again, 36 years. So you have lots of time for your child to use that education fund. And the sixth reason, and maybe one of the most beneficial, and it's kind of behind the scenes, is that you teach your kids to start savings. Okay, so when they're really young, obviously they're not going to be too involved, but our daughter, who's 7 right now, is actually quite involved in her RESP. So she understands that we're saving every month. She can see the account growing, and she looks at the compound interest. So we're teaching her about compound interest, how if you save $1 today, it's worth way more than just starting saving later on in life. So we're showing her how putting in $1 today could be worth $2, $3, $4 when she's ready to go to post-secondary education. So it's a bit of an education tool for us, a way to teach our kids about savings, compound interest, the benefits that the government gives us through the education savings grants. So there's so much to it. So we've used it as a bit of an education tool for our kids, and we encourage you to do the exact same thing for your kids or grandkids, whoever you're saving the RESP money for. So there's the top 6 reasons why you should open up an RESP. Again, free money should be worth it all in itself, but there's other benefits along the way as well. So hopefully you take advantage of an RESP, open one up, take advantage of those benefits. They are drastic. Again, that grant plus tax deferment plus potentially 0 tax rate when you pull it out. There's nothing like that in Canada. So take advantage of the RESP. And if you haven't already checked out our Financial Masterclass, click the link below or go to financialmasterclass.ca to find out more about our course. Again, 100 videos, downloads, content. There's a ton of stuff in there. Plus you get to join our community. It's a private community where you can ask questions. We do YouTube Live once a month where we'll go on, answer your questions, talk about hot topics in financial planning. So it's really in depth. It's going to teach you a ton about financial planning, help you get on track for your retirement, maybe help those around you get on track, and just it's going to change you and your generations to come, many generations. So be a part of that. Join below. Again, we have 50% off until December 15th. So take advantage of that. And if you're enjoying the content in these videos and these mini-series, please like the video. It really does help our videos get out to more people. And if you haven't already subscribed to the channel, do that and hit the notification bell, and you'll get a notification every time we release a new video, which is at least once a week right now. Thanks again for joining us, and have a great week.